If you were born before 1961, the day you turned 65, something quietly changed in the eyes of the federal government, your state, your county, and even your own bank. You didn't feel it. Nobody sent a letter. Nobody called. But on that birthday, you crossed into an entire legal category of Americans that these agencies are required to treat differently. There are bills younger people have to pay that you no longer do. There are taxes that shrink, freeze, or disappear completely the moment you cross that line. And there are fees quietly leaving your account every single month that never had to leave at all. I want to be very direct with you because this is the single most expensive misunderstanding I see year after year. Being legally exempt from a bill and actually not paying it are two completely different things. The law does not refund you automatically. Nobody at the county mails you a check on your 65th birthday. The bank that has pulled that monthly fee from your account for the last 20 years is not going to call and say, you know what, you can stop now. That one gap between qualifying and claiming is exactly why most seniors who are fully entitled to these breaks never see a single dollar of them. And before you decide this video isn't for you, let me clear up the biggest myth right at the start. People assume a list like this is only for low-income retirees who are really struggling. So if you own a comfortable, paid-off home, you tune out. Other people assume the opposite, that this is only for the wealthy with big estates and fancy accountants. So if you live mostly on a Social Security check, you tune out too. Both of those people are wrong. Both of them are leaving money on the table. Some of the fees on this list hurt the lower-income retiree the most. Others cost the middle-class homeowner thousands a year. I'm going to tell you on every single one exactly who it helps the most, so nobody watching can honestly say, well, that part isn't for me. My name is David Taylor, you're watching Senior Money Brief, and for years I have sat with retirees at the kitchen table, going line by line through the bills they were still paying that they had every legal right to stop. And the most painful pattern I see is not people who tried to cheat the system. Those people are rare. It's honest seniors in their 60s, 70s, and 80s who have done everything right their whole lives, quietly paying fees they were legally exempt from years ago, simply because not one person ever sat them down and said, here's the form, here's the phone call, here's how you stop it. That is the most expensive kind of mistake there is, because it's invisible. There's no late notice, there's no penalty, there's just money leaving your account every month that never had to leave. So today, I'm going to walk you through 6 specific fees you can legally stop after 65. One at a time in plain English, with the exact thing to ask for on each one. Some of them are small, some of them are worth thousands of dollars a year. And I want you to stay with me all the way to the 6th one, because it is one of the highest value on the entire list, and it is also one of the easiest to claim. If you only act on one thing from this whole video, it's probably going to be that one. Let's start with the first one, because it's the fee almost every American over 65 is quietly overpaying right now, and most of them have no idea it's even happening. The first fee on this list is not a bill that comes in the mail. It's quieter than that. It's the federal tax being pulled out of your pension, your IRA withdrawals, and your Social Security check every single month. And for a very large number of Americans over 65, the amount being taken is far more than the law actually says you owe. Here's why. The federal tax code gives every filer who turns 65 an additional standard deduction. This is a completely separate bump on top of the regular standard deduction that every American gets. It has been sitting quietly in the law for years. And then, starting with the 2025 tax year, Congress added a brand new senior bonus deduction of $6,000 per person for filers who are 65 and older. That bonus runs through the 2028 tax year, and it stacks right on top of everything else you already get. If you are married and both of you are 65 or older, that is $6,000 each, $12,000 as a couple, knocked off your taxable income before the IRS is allowed to touch a dollar of it. Now stack those 3 together, the regular standard deduction, the long-standing senior add-on, and the new $6,000 bonus, and what you find is uncomfortable. A very large number of people over 65 owe far less in federal tax than they believe they do. A meaningful number of them owe nothing at all. And yet, month after month, they keep over-withholding from their pension or their Social Security out of habit, or they hand their taxes to a preparer who is moving fast through a stack of returns and never stops to adjust for their age. In my reading of it, this is the single most common and most fixable money mistake that people over 65 make. And here's the part that quietly bothers me. the bonus deduction does begin to phase out at higher incomes. For a single filer, it starts shrinking past $75,000. For a couple, past $150,000. And at the very top, it disappears entirely. But look at who that leaves. The vast middle. The retiree living on a normal, modest income. For that person, this is real money taken straight off the amount the government is allowed to tax. And the people it helps the most are the exact people least likely to catch it. The 65-plus filer on a normal income who files their own simple return, or hands it to a basic preparer who never asks the right question. Now here's the part where comfortable retirees wrongly tune out. They hear senior deduction and assume there's an income test they'll fail. They assume it's a poverty program. It isn't. The extra standard deduction has no income cap at all. The new $6,000 bonus only phases out at the higher brackets. Age is what unlocks it, not need. So what do you do about it? This one is not a fight with anyone. It is a box that has to be checked correctly on your return. When your taxes are prepared this year, before you sign anything, look at the return and confirm two things. 1. The additional standard deduction for age 65 was applied. 2. The new senior bonus deduction was applied. If you use tax software, make sure your date of birth is entered correctly, because that is what triggers both of them. And then ask one more question that almost nobody thinks to ask. Should my withholding be adjusted going forward so I stop overpaying every single month? Because if you are quietly over-withholding by $100 or $200 a month, that's money you're handing the government interest-free all year long, waiting on a refund that shouldn't have to exist in the first place. And if the cost of paying someone is why you've been putting this off, listen closely, because you do not have to pay anyone. There are two free programs, Tax Counseling for the Elderly and AARP Tax Aid, staffed by IRS-certified volunteers who will sit down with you and file your return for free. They know exactly which senior deductions to look for. So for most of you watching, the cost of finally catching this is $0. That's the first fee. It's the one being taken out before you ever see the money. But the second one on this list is bigger. It's sitting on your kitchen table right now. And for a lot of you, it's the single largest bill you'll pay this year on a home you already own. The second fee is the property tax bill. And this is where the biggest dollars on the entire list are hiding. So I want you to slow down and stay with me, because there are actually 3 separate forms stacked on top of each other here. And most homeowners over 65 do not have a single one of them filed correctly. The first form is the homestead exemption. What it does is take a chunk of your home's assessed value right off the books before the county ever calculates what you owe. In Florida, that chunk is $50,000. In Texas, it's $100,000 off the school portion of your bill. Every state is different, but in nearly every state, it's real money. And here's where people get caught. Most homeowners assume the homestead exemption is automatic, that it just happens when you buy the house. In most states, it is not automatic. You have to file a 1-page form with the county appraisal office, usually before a spring deadline. File it once, and in many states, it stays on file for as long as you own the home. Miss it, and you pay the full bill that year for no reason at all. The second form sits right on top of the first. It is the senior, or age 65 exemption. Most states that offer a homestead exemption also offer an additional one that kicks in the year you turn 65. And this is the form the county will almost never mail you on its own. It is a completely separate application, and you have to ask for it by name. In Texas, every homeowner 65 and older gets an additional $10,000 off the school portion on top of the homestead. In Florida, the senior exemption can be another $50,000 on top of the basic $50,000, doubling the wipe-off. Now here's the part where comfortable retirees wrongly tune out. They hear the word senior and assume there's an income test they'll fail. But in more than half the states that offer this, Texas, Florida, Georgia, Tennessee, Alabama, and others, there is no income test at all. You turn 65, you file, you get it. Age is the only qualification. The third form is the most valuable of all, and it is the senior assessment freeze. Here's what it does. When you turn 65 and you file the freeze application, the county locks in your home's taxable value at whatever it is the year you apply. From that day forward, it does not matter how much your neighborhood gentrifies. It does not matter how high values climb on your street. Your tax is calculated on that frozen number. In Texas, once you file the over 65 tax ceiling, your school district tax is frozen at the actual dollar amount you paid that year. Your home can double. Your bill cannot rise. Let me show you what that means in real numbers, because this is where people finally sit up. If your home was worth $220,000 the year you turned 65, and it is now worth $440,000, and you never filed the freeze, you are paying tax on every dollar of that appreciation, and you will keep paying on it for the rest of your life. The homeowner across the street who filed one form is paying tax on the 220 number. Same house, same neighborhood, same year built, two completely different tax bills. The only difference is that one of them filed the form. Now, who does all of this help the most? Honestly, everyone. The basic homestead exemption helps the lower income homeowner the most in raw percentage terms. But the freeze is worth a small fortune to the person sitting on a paid-off home that tripled in value over the last few years, because they are the ones staring down the biggest yearly increases. And renters, I told you at the start this list was yours too. Here is why. Your landlord pays that property tax, and your landlord passes every dollar of the increase straight into your rent. When those bills are frozen or lowered across a community, rents stop climbing the way they have been. There is one rule on the freeze you have to know, and this is where people lose it forever. In most states, you have to file within a specific window, usually the year you turn 65 or the year after. Miss that window, and in some states, you can lose the freeze permanently. And even if you already turned 65 3 years ago and never filed, in many states you can still apply. The exemption goes forward from the day you file, not backward. So every year you wait is another year of overpayment you will never get back. Your one job this week is a single phone call to your county appraisal office. Ask them by name whether the homestead exemption, the senior exemption, and the assessment freeze are on file for your property. If any of them are not, ask which form adds them and what the deadline is. That one call is worth more than most raises anyone will ever get. That is the biggest bill on the list. But the next one is being pulled straight out of your Social Security check every month before the money ever lands in your account. And for a lot of you, your state will pay it for you. The third fee on this list is the one you probably don't even feel anymore, because it's pulled out of your Social Security check before the money ever hits your account. It's your Medicare Part B premium. In 2026, that premium is around $205 a month. Gone. Automatically. Every single month before you see a dime. Over a year, that is nearly $2,500 vanishing quietly from a check you worked 40 years to earn. Now here's what almost nobody is told. There is a set of programs called Medicare savings programs, and if your income is under the limit, your state will pay that Part B premium for you. Not lower it, pay it. Which means those $200+ stop coming out of your Social Security, and your monthly check goes up by that exact amount. For a lot of seniors, that is the single biggest raise they will ever get. And it doesn't come from Congress. It doesn't come from a cost of living adjustment. It comes from a program almost nobody bothers to apply for. There are actually 3 tiers, and they go by the initials QMB, SLMB, and QI. The most generous one, QMB, does not just cover your premium. It also wipes out most of your deductibles and your copays on top of it. So the surprise bills that land in your mailbox after a doctor visit, those stop landing too. The other 2 tiers cover the premium itself, but every version of it puts real money back in your pocket. Now here's what genuinely bothers me about this one, and it's why I'm spending extra time on it. The income limits are far higher than people assume. A single person can have a monthly income up to somewhere around $1,800 and still qualify. For a married couple, the line is higher still, up into the $2,400s a month. And on top of that, a number of states do not count your assets at all anymore. So your modest savings, your paid-off house, they do not disqualify you. And despite all of that, this remains one of the most underclaimed benefits in the entire federal system. Millions of people who qualify right now never apply, purely because no one ever told them the program exists. Do not disqualify yourself in your own head at the kitchen table. A great many people who are dead sure they earn too much land right inside that window. Let the application do the math. Who does it help the most? Anyone living mostly on Social Security, this is enormous for you. The action is one phone call. Call your local SHIP office. That stands for the State Health Insurance Assistance Program. They are free, they do not sell anything, and they will screen you for a Medicare savings program and help you apply. That one call can put close to $200 a month back into your check. Over a year, do that math yourself. And while you have them on the phone, ask about one more thing in the same family, because it usually travels right alongside it. It is called Extra Help. Some people know it by its other name, the low-income subsidy. This one is aimed at a completely different bill, the cost of your prescription drugs under Medicare Part D. If you qualify, and many of the same people who qualify for a Medicare savings program also qualify for this, it can dramatically lower what you pay for your medications, for your drug plan premium, and for your deductible. And here's the reason I mention it in the same breath. In a lot of cases, getting approved for a Medicare savings program enrolls you in extra help automatically. So that is two of the biggest health cost breaks in the entire system, both unlocked by one phone call. For somebody who is taking several prescriptions a month, that is not pocket change. That can quietly be one of the largest benefits on this whole list. One warning before we move on. Because the moment word gets out about a benefit like this, the phone calls start. Someone calls you, sounds official, says they're from Medicare or Social Security, and tells you they can get your premium refunded today. They just need to confirm your bank account or your Medicare number. Stop. Hang up. Medicare and Social Security do not call you out of the blue asking for that information to hand you money. You go to the source yourself. You call SHIP. You never give your numbers to whoever called you. That's fee number 3, and it's the one being pulled out of your check before you ever see it. The next one is smaller, but it stacks with everything else. And it's a bill the system already decided people in your situation should not have to carry alone. The 4th fee is smaller in dollars than the last 3, but I'm not going to skip past it because it is still a bill you can legally stop carrying in full. And when you stack a few of these together, the monthly number really does start to move. There is a federal program called Lifeline. What it does is take about $9.25 a month off your phone bill or your internet bill. And many states stack their own discount right on top of that, which can push it higher, in some states, meaningfully higher. It applies to whichever service you rely on most, and it works whether you use a landline, a cell phone, or a home internet connection. For a senior who is on a fixed income and using a cell phone mostly to stay in touch with their kids and grandkids, that discount can cover a real chunk of the monthly bill. And separately, if heating or cooling your home is ever a strain on the budget, there is a completely different program that goes by the letters LIHEAP, the Low Income Home Energy Assistance Program. It helps pay that utility bill directly. And here's the part most people miss. When they hear heating assistance, they picture the dead of winter and nothing else. But this program covers cooling too. The air conditioning that, for an older person in the heat of summer, is not a luxury, it is a safety issue. There is usually a crisis piece on top of that as well. If you've gotten a shutoff notice, or your furnace or your air conditioner has quit on you, there are emergency funds specifically for that. I have to be straight with you about one thing on LIHEAP, and it is the reason I'm telling you now instead of 6 months from now. The money for this program is limited every year. When a state's funding runs dry, that's it until it gets refilled. States hand it out first to the households they consider most vulnerable, and older Americans on a fixed income are usually right at the top of that list. But you have to actually be in line. Do not put this one off until the cold sets in and the money is already gone. Now, I will be honest with you. Lifeline is not the glamorous one on this list. $9 a month is not going to change your life. But here's how I want you to think about it. It is one more recurring bill that the system already decided people in your situation should not have to carry alone. And it is sitting there unclaimed for the same reason as all the others. You only get it if you ask. How do you claim these? For Lifeline, you apply through the federal program directly, or your phone or internet company can walk you through it. For LIHEAP, you contact your local energy assistance office. Every state has one. Or do the simplest thing in the world, dial 211. In most of the country, that is a free helpline that will point you straight to the office that handles this where you live. Both programs are free to apply for, and nobody legitimate ever charges you a fee to sign up. Now we get to the 2 most expensive misunderstandings on this list, and this is where the real money lives. The 5th fee on this list is the one almost no one warns seniors about, because the people collecting it are the very same people you have trusted with your money for 30 or 40 years. It is the quiet drain of bank fees, and it is also the trap that can freeze your account for weeks at exactly the moment you need your money the most. Let me start with the fees, because these are the easiest to stop. Almost every major bank in this country has a senior checking account or a senior tier on their regular checking that waives the monthly maintenance fee, waives certain overdraft fees, and often gives you free checks and free money orders. The catch is simple. You have to be 65 or older, and you have to ask for it by name. The bank will not switch you over automatically. You could have been with the same bank for 4 decades, and they will happily pull that $12 or $15 monthly fee out of your account every single month until the day you die. Unless you walk in and say, "I am 65 or older. I would like to be moved to your senior account. $12 a month is nearly $150 a year. Do that math across 10 years of retirement, and you're looking at real money, quietly gone, that never had to leave. But here's the part that matters more than the fees. And this is where I need you to lean in, because this is where seniors get hurt the worst. As of this year, more than half of all states have passed what are called safe harbor laws. In plain English, these laws give your bank the legal power to freeze your money and delay your withdrawals if they suspect you might be getting scammed. And the age line written into these laws is 65. That's you. The day you turned 65, you became what the law calls a specified adult, a special protected category. And the freeze window in these new rules is commonly 14 to 15 business days. Business days. That means weekends and holidays don't count. 15 business days can stretch to 3 full weeks on the calendar. 3 weeks without access to your own money, while the bank decides whether you are safe, without needing your permission to do it. Now, the intention behind these laws is good. They were written to stop a grandmother from wiring her life savings to a fake grandson in jail. But the bank does not know the difference between a real scam and your normal life. So the systems guess, and they get it wrong constantly. A sudden large withdrawal for a new roof, sending money to a grandchild for the first time, logging in from a new tablet your daughter gave you at Christmas. Any of these can flag your account and freeze it. There is one move that makes you almost impossible to freeze, and it costs you nothing. It is called a trusted contact. Almost every bank now lets you name one person on your account, a son, a daughter, a close friend, whose only job is to answer one phone call if the bank ever gets nervous. A trusted contact cannot move your money. They cannot see your balance. They cannot make decisions for you. All they can do is vouch that you are a real person living your real life. So instead of the bank slamming the door shut for 3 weeks while they investigate, they make one phone call. Your daughter says, "Yes, mom is buying a car, that's normal," and the freeze never happens. You have preloaded the answer to the question before they ever ask it. And 2 more small moves that layer right on top of it. Never spring a large withdrawal on your bank cold. Walk in a few days early and tell them out loud, "On Friday, I am taking out $15,000 for a new roof." That one sentence, said in person, puts a clear, innocent reason on your file before any algorithm can invent a suspicious one. And keep a modest cushion of cash safely at home. Not because you distrust your bank, but because if your account is ever frozen for 3 weeks, you still need to eat, still need to pay the electric bill, still need your medicine. 2 calls. Ask for the senior account. Add a trusted contact. That is fee number 5 handled. Which brings us to the 6th and final fee, the one I promised at the very start. It is one of the highest value on this entire list, and it is also one of the easiest of all to claim. The 6th fee is the one people laugh at until they actually add it up. Then they stop laughing, because a great many of you are paying it every single year without knowing that in your state, once you cross 65, you didn't have to anymore. In a number of states, once you hit a certain age, usually 65, sometimes a little earlier, your annual vehicle registration fee, your excise tax on your car, or your local personal property tax on that vehicle gets reduced or waived entirely. Some states knock a flat amount off the registration. Some states cut the excise tax in half. Some states waive it completely for seniors on a fixed income. And a few states go further and reduce your driver's license renewal fee at the same time. It is not a huge number on any single year, but it is your money. It is sitting there, and it recurs every 12 months for the rest of your life. Multiply even $50 or $100 a year across a 20-year retirement, and you are looking at a real amount of money quietly leaving your account for a fee the state already decided you didn't have to keep paying. And there are 2 more bonus moves in this same family that almost nobody hears about, so I want to make sure you do. The first is the surviving spouse carryover, and this one breaks my heart every time I see a family miss it. When one spouse passes away, the senior exemptions and the freeze we talked about earlier do not automatically transfer in many places. Families lose them by accident. The county quietly recalculates the bill and it jumps overnight, sometimes by thousands of dollars, on the exact household that just lost half its income. But if you file the right paperwork within the window, usually within a year of the death, and the surviving spouse usually has to be at least 55, you can often keep that deceased spouse's exemption alive. Most counties will not raise the question on their own. They will simply let it happen. Do not let them. The second bonus move is the one I want every homeowner to hear, whether you served or not. If you served in the military, the disabled veteran exemption exists in almost every state, and depending on your service-connected disability rating, it can wipe out your property tax bill entirely. A 100% service-connected rating in Texas, Florida, Virginia, Pennsylvania, and many other states means zero property tax for life on the home you live in. Even a partial rating, 30, 50, 70%, often translates to a proportional exemption on top of every other exemption on this list. The form is usually a single page plus a copy of your VA disability letter. If you served, file this form. If your spouse served, find out whether the exemption can transfer. And one last quiet move that costs you nothing and works every single year. Protest your property assessment. Every property tax bill is built on top of the county's appraised value of your home, and that value is set by an assessor who has never been inside your house. Every county has a right to protest process, usually within 30 to 60 days of the appraisal notice. You file one page, you bring 3 comparable sales that came in lower than your appraised value, and in a significant percentage of cases, your appraised value comes down. In most counties, fewer than 5% of homeowners ever protest, even though something close to half the protests that do get filed result in a reduction. None of it is automatic. Your county will not call. Your bank will not flag it. Your tax preparer will never bring it up. Every single one of these fees, all 6, sits on a shelf until you walk in and ask for it by name. So let me bring this all the way back to a real person, because this is what it looks like when all 6 get fixed at once. I once sat down with a woman I'll call Margaret, 72 years old, a widow up near Toledo, living in a paid-off home that had quietly doubled in value over the years, getting by mostly on her Social Security and a small pension. And when we looked at her situation, here's what we found. She was paying the full Medicare Part B premium every month. She was paying the full unfrozen property tax bill on a home that had appreciated for years. She was paying a monthly maintenance fee at the same bank she had used since 1978. And she was paying more in federal tax than she actually owed because her preparer had never applied her senior deductions. All of it at the same time. Every single one of them. Something she had the legal right to stop. Nothing about Margaret's life changed. She did not move. She did not sell anything. She was not gaming the system. She was simply, finally, claiming what she had already earned over a lifetime of doing everything right. So here is exactly what I want you to do this week, and none of it costs you $1. First, call your county assessor's office and ask them by name whether the homestead exemption, the senior exemption, and the assessment freeze are on file for your property. Second, call your local SHIP office and ask them to screen you for a Medicare savings program and extra help. And third, the next time your tax return is prepared, confirm that both your senior deductions were applied and ask whether your withholding should be adjusted. 3 calls, that's the whole thing. If you want a plain English guide that walks through every one of these, the forms, the phone scripts, the exact words to say, I've put it in the description below. It's called the Senior Money Brief Guide, and it's the one my viewers have asked me for the most. One quick note, and it matters. This is general education, not personal legal or tax advice, and these rules do vary by state and by income. So always confirm your own situation with your county, your state SHIP office, or a qualified professional before you act. If this helped you, do one thing for me. Send it to one person you love who is over 65. It won't cost you a thing, and it just might put a few $100s a month back in their pocket. I'm David Taylor. This is Senior Money Brief. I'll see you in the next one.